Hello and welcome to episode 2 of the Market Maker Monday series. This time what I wanted to do is I wanted to just do a process from beginning to end, how I would approach breaking the market down. So the time of recording this video is Sunday, and what I will usually do is when the markets are closed, I'll start on the monthly time frame. I'll go down to the weekly and the daily. I'll have a look at the price action. I'll also have a look to see where the institutional sponsorship is and to see what the order flow is, the market, and then try and anticipate the time of the month, time of the the weekly profile and things like that, to just give me a better understanding about what's happened recently, the significance of that, where we are currently, and where we might be heading next. And then also from that framework, what I'll do is I'll narrow that down to I'll try and identify days of the week using the economic calendar for the following week. So this week coming up, I'll give you a quick run through what I can see in terms of medium and high impact news. So we'll try and highlight when I anticipate the moves to occur in the market. So without further ado, this here is the US 500. So it's the S&P 500 on TradingView. And in the previous videos that I've done, I've not actually announced what they are, but as you can see up here, this is what it is. And what I've been doing personally is I've completely moved away from Forex. I'm not really paying attention to that whatsoever. I couldn't tell you what's going on in that market. And I'm only really using the NASDAQ to give me a bit of a leading indicator, or an indication I should say, into what the S&P might be looking at doing as well. So when we're on the monthly time frame, I have previously highlighted that we're rejecting this candle here. So this would actually be a bullish order block. We've actually created a 1, 2, 3 swing low on the monthly time frame. And if you compare this swing low to this swing low, what you'll see the difference here is we've actually got all of this wick action, whereas this has actually traded all the way down and then it's created a bullish order block. And what we actually did last week, although the monthly is showing a little doji candle, we've actually traded above the open price from the 1st of June. So the significance of that, when you look back in time, here for example, we have a big bearish down move candle and we traded above, and then we saw price action to the upside. And if you were to go back through your charts and you have a look at how order blocks are formed, basically the institutes, all the smart money is buying on the way down. So what they do is they create a sell program in order to buy the market at a cheaper price. And now we've actually traded above this monthly candle. I'm now expecting prices to go higher. So I don't know if we're going to be now seeing all-time highs. Obviously, we can't project that far in the future. However, it is giving me an idea of confidence to suggest that the price needs to rebalance higher now. So we've actually tapped into this bullish order block. We've actually failed to close below. We've actually spent quite a long time building orders down here. So when you go to the weekly time frame, in fact, actually, before I do, order block theory, you also have the mean threshold. So I will use this tool here to create the 50% mark on this candle. And I'll bring that in here. So you can see where the upper boundary was of the monthly order block, which was the open price of June. And the significance of that is actually 50% mean threshold of this candle here. So you could do another one of those there, and you can see that we're currently trading in and around this area. And if I zoom in, you can see that we are actually starting to hold the price here. So on the weekly time frame, we've actually paused. So I think the weekly expansion for next week is going to be bearish down into coming to close some of this gap. So we've got this imbalance here, which is a weekly fair value gap. There we go. And I'm going to delete that off, but I will keep this here. So we've got a dealing range now on the weekly time frame. If we're expecting bearish prices to come in and close this range, that would still leave us in a premium for this market here. So we may come back down, tap into it, and then we want to trade higher. Or failing that, if we go to the daily time frame, you can see that what we've got here is we've actually got these lows. So if we come back down into this fair value gap here on the daily and the weekly time frame, and then we reject it and we close higher, that would give me a good indication that all we've done is we've just come down to take some of the sell side liquidity to make a run higher. Now, if you compare the price action where you've got the original consolidation here, you've actually had a move down to go up. If you compare that price action to the NASDAQ, which is here, you've got the original consolidation, the move down. We've actually traded higher above that. And you can see that all of the down candles in this buy program are currently being respected. So if we go back to the S&P 500, as long as these downward candles in the institutional order flow are being respected and rejected, so you can see here where we've actually got this monthly bullish order block, which is now holding price here. So we've taken the liquidity below this low and we've actually traded back down into the mean threshold of this daily order block, which is in and around here, but we'll just use the open for ease of reference. So we have actually respected that in price. Now, that's not to say that we don't want to actually come back down further. And if we did come down further from here, this would still be bullish, in my opinion, until we actually broke this low here, because this could actually be just creating some consolidation. We could trade into it and then turn around from here. So in the near term, we've actually got this dealing range here, which I am going to keep on. So we actually come back down, and if we were to completely close in this imbalance here, that would actually put us back to a discount, which could then see us trade higher. So I'll be anticipating a move lower to go higher, but I'll also be watching price action in Monday and Tuesday to see if it wants to go higher at the beginning of the week. If it does, then that could indicate that we're going to have the Judas swing up here to take this liquidity to then come back down and to give us a bearish close week. So you've always got to consider both sides of the market, which might seem like a cop-out if all you're interested in is trying to have a correct prediction. But you need to approach your trading in the sense of, if this happens, then I'll do this. But if this doesn't happen and this happens instead, then I'll do this. So you've got two different plans. You don't become infatuated with either one. You don't marry the vein, as ICT has called it before. You're trying to anticipate what could happen in the market. And if you see either of those panning out, you use that information and that framework along with the time of day and also with the weekly profile to give you a bit more of an understanding and to make sure that you can align yourself on the correct side of order flow, but also the overall momentum. So this just looks like a bit of consolidation, to be honest. So I'm not actually taking this as a higher high and a higher low. I think this is just consolidation, and I think we could actually come back down here to rebalance some of this, tap back into that weekly imbalance, and then follow the NASDAQ. Again, it went the wrong way. Follow the NASDAQ and clear the buy side liquidity above this. So what I'm going to do, I'm going to remove all of this. I'm going to select the correct tool. Where are we? Here we go. So I'm going to treat this as my overall dealing range. I'm going to highlight this area here. Now, because I don't know necessarily if this is going to be a bullish fair value gap, I'm actually going to leave this white so it's neutral, as opposed to shading it in red or green to indicate buying or selling. What I'm also going to do as well is I'm going to highlight this objective here and then this objective here. So this is going to give me on a weekly time frame a fair value gap, which is a bearish indication. So that's actually an area of interest. So we've got this short term or intermediate term high. We've got the lower part of the range for that weekly fair value gap. We've got also this imbalance here. If you go to the daily time frame, what that also gives you is this breaker pattern as well. So ICT actually teaches breakers to be incredibly strong in the market. So we've got some downside objectives. So on Monday and Tuesday, what I will be doing is I will be using the price action on the 1 hour time frame to see where price might be suggesting that it wants to go. So we've already had a shift in market structure here. So I'm going to take this. So we've had a low form here on the 1 hour time frame. We've had an intermediate term swing. We've actually got an intermediate term high created here due to the fair value gap. So when we're now looking at the lower time frames, I think we could see some trickery here, but we're expecting this high not to give way. We could see a little bit of gapping in the market. We're going to come down, I think, definitely to come and take these equal lows here, which is also going to put us into the weekly and the daily fair value gap here. So in terms of my framework, this is all I'm going to keep on the charts. I'm going to be keeping an eye on the 1 hour time frame. We see if there's any fair value gap. So we're still trading within this bearish fair value gap that was created, and obviously all this choppy price action was created due to Friday's NFP last week, which I didn't trade at all last week. And as long as we're seeing this fair value gap hold in price here, I'll be looking at taking a short opportunity down to take profit down here, and then I'll be having a look to maybe leave a partial on to come back down to completely fill in that imbalance there, and come back down to a discount before we look for higher prices to come back up here. So that's my overall sort of trade prediction, if you like. And that sort of comes to the end of episode 2 of Market Maker Monday. I hope that has been informative to you. And if you've got any feedback at all, or if you want me to do, in addition to these videos, if you would like me to do any sort of deep dive topics, I know somebody's already suggested order blocks and in the comments, so thank you very much for that if you're watching. But if there's anything really that you want me to cover in depth and to do a feature topic on, as I've previously done in some of the other series on my channel, then please just put those recommendations in the comments below. I'll include all the necessary links in the description. But if you found value in this, please hit the like. If you're not subscribed already, please do so. And if you know anybody else that's following ICT and that would like to build on that series, then please recommend my channel to them so we can try and spread the word. And I'd really like to grow this and to provide an opportunity really to try and create a little bit of a community as well for ICT students. Okay, then that's enough from me. Thank you very much for watching, and I'll speak to you soon. Bye.